Good evening, champions. How are you guys doing tonight? Cap A at helm here tonight with you guys. Navigating market, looking for the next big thing, great idea, and most importantly, always riding by every market trend by your side. So for those that do not know me, I'm Cap A, also known as Adrian Ng, with Group Equity Marketing of Kenanga, which I've been always hosting a weekly session in the morning. Monday morning, 8:30, if you have tuned in. Tonight, we'll be hosting Tech Sector Outlook along with our analyst, Woon Pin, and she will actually bring us through the session tonight instead of Ming. I would like to apologize for Ming's absence. That's because he has an emergency at home. And yeah, but rest assured, a brief introduction of Woon Bin. He's a young and upcoming talent. Where he has been, he kind of graduated from JP Morgan. It took us a while to pinch him, it's quite a tough fight. Local proud grad of APU. I love that university. They do a lot. They are quite advanced. And yeah, that's where it is a tech university where he studies actuarial science. Fantastic, right? And yeah, so be rest assured you are actually in good hands, and he's Ming's prodigy. That is not the end. We must also make good use of Isabel's time and try to squeeze more savvy techniques to leverage on and tools. She's really, really good. The Queen of Warrants. Yeah. So without further ado, I shall highlight about the disclaimer. All three of us are all licensed by SC. Myself and Woon Pin is as a licensed analyst in the advisory license, while Isabel is on the dealing license. These are the awards that we have been winning in 2020, 2023, 2024. The list just gets longer in 2025. And probably I'll need to create another slide for that, right? That's because you guys give real good feedbacks, and that's where we can improve from time to time. Let me add these folks in. Okay, without further ado, I'll actually jump into the review of the market as usual. Let me change my pen color to orange because orange is the new black, right? Dow Jones is actually seeing a bit of weakness, like I've highlighted in one of these Monday morning, that we want to start to be a bit more cautious. It's kind of weakening in terms of stochastic reading. You can see it's a bit iffy. So far, I think the Fed news from Fed is 50-50 again. So market is looking for a fresh catalyst. So for those that are heavy on the US market, you may want to consider start to take some profit and also be a bit more conservative. Yeah, we must be prepared. Yeah. In terms of Hang Seng Index, as we start the week on Monday, I was actually sharing with everyone that I'm expecting a pullback, and it did happen here, and now it has rebounded. See, the fantastic part of my market is we are anticipating a retracement, but before I can actually review it again on the next Monday, it has rebounded for quite a fair bit. Why did I say a fair bit? That's because if you were to participate on the market through warrants, the volatility is actually very, very sexy. So where do I see Hang Seng futures now? I will see that if it can stand a strong footing at the 26,478 level, that would be a stronger continuation upward here. But we want to wait until the week in how it stands. If it stands well, there you go, all the way up. If it does not, you got your answer. So what would be more advisable to do? If you are an avid warrants trader, or if you're just starting off, especially for those that are starting off, you might want to consider to monitor the opening of the market before you make a decision. Then you trail on it. I would definitely jump into the Naga Warrants website to see the tick sensitivity. I'll leave that to Isabel to share with you guys. Because she's the Warrants queen. I'm actually learning from her. A lot more to learn. So that's the Hang Seng index for you. Straits Time index, I read in some article that I think JP Morgan predicts that they're going about 6,000 target. I shall not say if that's true. While we're not or not, I'm not predicting that far ahead. I would actually see that the current retracement is coming to an oversold zone, and there could be a rebound. For a rebound of the STI index, you may look at DBS, OCBC. The banks are strong, and the REITs are strong too. Right? If you want to dive deeper into the stock trading ideas for Singapore market, do join me on every Monday morning, 8:30. If Monday morning is a holiday, the next very trading day. FBM KLCI is actually hanging on. The moving average level here is actually very critical. 1591 level is critical, so that's where I see that. I hope that it does not break. And yeah, if that break, we will need some time to recover again. So let's see how it goes. If it does break, it's actually a mini double top. I will want to wait and see. Of course, strength is waning. Buy momentum has waned a bit, but based on observation today, the mid cap space is getting a bit of a posture. So that's not all what they call a bad thing. All right. So that's all from me in terms of review of the few markets. Before I pass on the floor to Woonpin, we do have several campaigns. First is Wake Up to Go for our dormant clients. It's time to wake up. You can start by joining my Monday session to refresh yourself before you actually partake in the market. And yeah, and you still stand and you can stand a chance to win gold. Fantastic, right? I kind of love the notion of that. Secondly, while I think the market is coming back, it's good to be prepared on facilities. So it's quite timely. I must thank the entire team, Group Equity Marketing, for coming up with this DF stretch campaign, where we have a T plus 7 flexibility with a DFE of 0.2 and an interest rate of 6.8 per annum. Do call your dealer and reminder to find out more how it can help you in terms of the shorter term trading to take opportunity of the current market cycle. Based on how I see it, the current market cycle is not too bad. There's a lot of opportunity. All right, next one. Yeah, that's me. Riding every market trend by your side. Cap A. If you have not seen me, that's me here. A bit shy. Next. KDI Safe and KDI Go Invest. I've always been a supporter because it kind of maxes out my pocket money. I'm a bit calculative sometimes in terms of investment, right? So yeah. Without further ado, I will jump to the quote page, right? In investing, what is comfortable is rarely profitable. Robert Arnold. Fantastic. It always reminds ourselves that we want to push our limits bit by bit, not just totally 100%. That's at least what I can derive from there and suit it to my own style. And I guess that's all from me. I shall not take any more of your time and Woonpin's time. He's the star of the night. And yes, Woonpin, the floor is yours. All yours.
Okay, thank you so much, Adrian. So let me just have to share my screen. Let me know if you can see my screen.
Yes, very clear by Woonpin.
Okay, so thank you, Adrian, again. So good evening, everyone, and thank you so much for joining us today. So I'll be walking you through Malaysia's technology sector tonight, with a particular focus on semiconductor, which continues to be a critical growth engine for both the local economy and also the global supply chain. So for the session today, we will start with a broad overview of the global semiconductor ecosystem. We'll be looking at some of the key players across the value chain, from design to manufacturing to testing to assembly. In the process, I will be also touching on how the emerging areas like the hot topics AI, data centers, humanoids, robotics, and also the autonomous vehicle are shaping the semiconductor demand and how can Malaysia fits into that picture. And then next, we'll be narrowing the focus to Malaysia's semiconductor value chain. So over here, I'll be mapping out how the global and also the local players interact, try to highlight how Malaysia's strength in the back end side of things can actually complement and move us up the value chain. And moving on to discuss about the national semiconductor strategy that's recently being championed by the government. And then finally, we'll be closing the session with a sneak peek and then also the valuation. So let's start with an overview of the semiconductor ecosystem. So you can see on the right hand side, on the left hand side, we have a triangle. So that shows the semiconductor ecosystem. So in layman's term, think of making the semiconductor chip as a process of running a high-end restaurant kitchen. So first, the chef they will plan the recipe first, which is in this case the chip design and also the IP side of thing. And then after you plan the recipe already, then you will decide what kind of tools that you want to use to cook the meals. And in this case, it is belongs to the EDA tools. And then after you decide what kind of tools you want already, and then the next thing is you decide what are the ingredients that you want to use. And then in this case, it refers to the material and also the critical gases that's going to be used. And then finally, it's a process of cooking in an extremely precise machine. So in this case, it is the wafer fab equipment and then to create the chips on a large wafer. So after all this process, then we'll go to the back end side of things. So after the chef had cooked already, so usually in the restaurant, then we will be ready to serve already. But before that, we have to pick it first, and then we have to put a little bit of aesthetic arrangement there. So in this case, the one is a back end side of thing, which Malaysia strong in. It is the offset kind of thing. So generally, there are three main business model under the semiconductor value chain. The first is a fabless designer. Traveler designer is referring to the celebrity chefs who they are involved in designing the chip, but they rent someone else's kitchen. So meaning that the chef, they only decide, okay, this is the food that I want to cook, here's the recipe. He's not cooking it in his factory, he's asking other people to cook for it. And then the second business model is a foundries. So the foundries is a commercial kitchens. They do not involve in the process of designing the chips. They are just a kitchen. So whoever the chef that comes to them, hey, I have a recipe here. Can you help me to cook? So in this case, the fabless designer, the tech company like Apple, they will be bringing the chip design to foundries like TSMC and Samsung. And say like, hey, can you help me to design these chips? And then TSMC is like, okay, no problem. So we will do it. So they are purely the commercial kitchen in this case. And then the third business model is the IDMs. So the IDM is Pao Liao. They are involved in both fabless and also foundry. So they have the chef and then they have the kitchen as well. So looking at Malaysia listed champions, we mostly see in the back end, which is the assembly, packaging, and also the testing, which in the short form name or SAT, and the broader equipment and engineering ecosystem. So all this while, this back-end role has been our traditional strength because it's capital efficient and then it's scalable and then we kind of like leverage on Malaysia's skill forces and also reliable industrial base. So globally, different kitchen tools dominate different steps. So in this case, ASML, I believe some of you may have heard this name. They are the champions in lithography. And then we have players like Applied Material and Lam Research from US. They are involved in the deposition and etching, while KLA, they are involved in inspection. Don't be scared by all these jargon. I'll try to simplify it as I go. So why this matter to us? Malaysia players, we generally win when this giant invest and expand because technically, these players like ASML, Applied Materials, Synopsys, the companies that you can see here, they are belonging to the front-end semiconductor. And whereas Malaysia players, who is at the back-end side of things, they are our customer. So when they invest, when they spend, when they produce more products, that's where our listed company will be benefited. Hence, as a whole, Malaysia is generally focusing on the back end, and we need to ensure that the front end players they keep investing and they keep spending in order for us to have the business. So this slide shows the global semiconductor ecosystem. So roughly three stages as well. So on the left, we have the design and IP provider like who has recently landed in Malaysia. So we have a design software like Cadence, Synopsys, all these belonging to the US companies. And then we have chip designer, NVIDIA, no straight to all of us, AMD, and also Qualcomm. And then in the middle of the picture, we have the wafer fabrication and the specialized segment like memory, power IC and analog chips, which is led by some of the foundries like TSMC, Samsung, and also Intel. So on the right-hand side, it is where Malaysia is engaging in assembly. So we have local champions, local companies like Inari, MPI, and Unisem. They are belonging to the group of globally competitive players in the OSAP place. Hence, Malaysia is not too bad. So moving on to the hottest topic in the town, which is the AI semiconductor ecosystem. Um, the gist of understanding the whole ecosystem, why is it so important is that we want to be able to identify who are the winners and beneficiary when something comes up. So in simpler terms, the AI chips, they are like the engine and also the brain for the data center itself, which they power the model for training and sort of inferencing. So this process, as as the year goes, they demand a faster process, higher input and output, and also more denser memory, like high bandwidth memory. And this actually raised the bar for testing and packaging, which Malaysia is strong in. So in simpler terms, the AI actually turns on a heat, and then we just need to be better in the cooling, more precise testing, and automatic handling, so that the whole process can be better. So in Malaysia, AI created two layers of opportunity. So the first layer is itself is within the chip brain, inside the chip. So the rise of chips for the AI application, it will kind of necessitate the needs for the packaging and then also better inspection and then also better way of handling it. And then the second layer is around the data center build up, which Malaysia has experienced a very strong growth in that area since 2023. So this includes the likes of server racks, power, interconnects, monitoring, etc. So this slide illustrates what is Malaysia's role in the AI and also the data center supply chain. So at the infrastructure level, we have utilities like Kenanga National. They provide the power backbone to power the data center. And then we have construction players like Gamuda, IJM, and Sancom. They are responsible to build the data center from scratch. And then we have specialized firms providing the MEP, the mechanical and electrical job to hook up the whole data center. So where Malaysia stands out the most, I would say, is actually on the hardware ecosystem. So on the server side, which is the GPU, we have distributors like VSTech, SNS, and also Ingram Micro in Malaysia. And then at the EMS level, so EMS in layman's term is just assembly where you put the GPU inside a server and then you package it together with other tools to make it a complete server. So on the EMS level side of things, we have high PIE, we have Nation Gate, and then we have yeah, I think that's it. So this contribution, the involve server, switches, optical transceiver, all these little components that make up the whole server. Okay, so since 2024, Malaysia has been partnering with a lot of global cloud and also AI players, scaling out the data center capacity around Johor and also KL. This is important for two main reasons. So the first is the in-country compute supports the AI use cases a lot across the government and also the industry. And the second important is that the supply chain around the DC power is actually lifting the Malaysian tech sector. Not only that, also spilling over to the construction and utility side of things. Okay, so moving on to another rising topic, which is humanoid. So when we talk about humanoid, we are referring to the robots that are designed to resemble and also interact like a real human. So this humanoid is unlike the kind of robots that we see sometimes in the restaurant, like where they are following a certain pathway, they can actually help to deliver the food to you. That one is what we call industrial robot, but not really a humanoid, because a humanoid is equipped with the ability to process and also to make its own decision in real time. So looking at this value chain, these are the top 100 companies that are part of the humanoid robot supply chain. Of course, you don't need to remember every component, every company here. Even I also I'm not familiar with all of them. So the key takeaway here is what I try to highlight is the brief of the electronic and also the semiconductor inside each unit. Autonomous vehicle, which is another area of growth, is one of the exciting application for the semiconductor. So in layman's term, autonomous vehicle means you don't have to drive the car will drive itself. So it's a driverless car, I would say. So the value chain covers many layers. At the top of it, we can see the car makers brand like Tesla, Toyota, and BMW. These are the players which will integrate the autonomous driving feature. So supporting this car brand, the Tesla, everything are the mobilities platform like Uber, Baidu, software centric, and then the underlying technology such as high performance processor, because in order for the driver to be able, the car to be able to drive itself, you need a very powerful processor, and then you need a lot of sensors so that they can sense what is an obstacle in front, and then how to make a decision in real time. So for Malaysia, the benefit comes from being a critical part of the global supply chain. So as EV adoption and also AV adoption accelerates, we foresee the demand for the chips used in the sensors, the processor, and also the power management, it will rise sharply. So Malaysia, as we know, we are strong on the back end side of things, will stand to benefit from this major trend. So next, I will be showing you some data on global semiconductor sale. I promise it to be fast. So this chart actually tracks the global semiconductor sales over time, both in the year-on-year growth and also the absolute dollar term. So looking at this chart, a few things actually stands out. First is the industrial is highly cyclical. We have up cycle and then we have down cycle. So the growth and also the contraction phase typically lasts between 13 to 30 months. So for example, we saw a sharp downturn in 2009 during the global financial crisis, followed by a strong rebound after that due to the quantitative easing policy from the US side. So more recently, there was a 30 months upcycle between 2020 and 2022. This is driven mainly by the pandemic-related demand for electronics and also data center, followed by a correction that lasts around 15 months. So as of July 2025, if we were to look at the global semiconductor sales, it was up 20% year on year. And with the industrial is reaching an annualized rate of 600 billion. So a key takeaway here is that while semiconductor, they are cyclical in the short term, but overall, if you look at the long term, the trajectory is clearly upwards because every few years we will have some kind of structural demand from application like autonomous vehicle, AI, EVs, and also data center. So a little bit of history here. In 2000, growth was largely driven by consumer electronic. So it was referring to the PC and also the mobile phone. So that momentum was actually cut short by the global financial crisis 2008, which triggered a sharp downturn. And then the following years, we saw recoveries fueled by smartphones, which become a dominant growth driver around 20. And then as smartphone matured, the industry enters a kind of short upcycle and correction. It's often tied to some kind of inventory adjustment. And then comes the COVID-19 pandemic, which drove an unprecedented surge in the demand for remote work devices and also data center. So it is one of the longest upcycle that we have seen in the industry. But as with all the cycles, it was followed by a correction in 2022 and 2023, mainly due to the inventory overhang. So looking at the industry today, it's a new uptrend driven mainly by the AI demand and also automotive semiconductor. So this could be the next structural growth phase. Okay, just a brief touch through around this. So the global semiconductor sales accelerated in July, rebounding more than 20% year on year, and also 20% same in June, which we believe that is continuing to be driven by logic and memory, backed by the strong demand on the AI side of things. Okay, now so let's zoom into Malaysia's semiconductor value chain. So here is where I will break up what each company in listed tech company in Malaysia they are involved in. So at the very top level is a device and also the IC design. So this is what we usually call the front end side of things. So this where some of the international company like Intel, Qualcomm, Broadcom, they create the blueprint, they create the recipe for the meal. Then looking at local companies in Malaysia, we have Oxfam, and then we have Skychip that is soon to be listed in Malaysia. They fall under this value chain. They are involved in the IC design. And then next is a wafer fabrication. So in short, it is just a kitchen to cook the meal, the recipe that the chef has cropped up. So unfortunately, in Malaysia, we have a very little exposure on this wafer fabrication because think of it, the wafer fabrication, the industry itself is very capital intensive. So in order for you to own a very big kitchen and then also own engineers, you really need a lot of capital, which Malaysia is typically not strong in. But in Malaysia, we do have a Silterra foundry as a local foundry, focusing mainly on the automotive side of things, which is under Dinix. So where Malaysia really comes into is the back-end side of things. So you can see over here, we have the assembly, packaging, and testing. So this is the stage where the finished wafer, after being tapped out, after being produced by the kitchen already, will come to these players, and then they are cut into individual chips. Because if you look at the wafer, it's a round shape, and then we have to cut it into individual chips. And then after we cut already, so this one is a naked chips. So we have to package it to protect the chip inside. And then after we package already, we have to do the testing to see whether it is really working as intended or not. And then the supporting the back end, offsite is equipment and also automation. So in order for the offsite companies to do all the packaging, all the testing, finally we need a specialized equipment. So these equipments are supplied by the ATE, Automated Testing Equipment Companies in Malaysia. So we have some familiar names like Vitrox, Greatech, Pentamaster, Emulus, Elsoft. And then at the very bottom of the value chain, we have the EMS, Electronic Manufacturing Services. So this company, they don't design chip, but this company, the EMS, for example, NationGate, they will take them and integrate them into the end product. So whether there's a smartphone, laptop, or maybe a hair dryer, Dyson hair dryer, so they will take the chip and then they will catch it into the final product itself. Okay, so next, moving into the Malaysia National Semiconductor Strategy. So the National Semiconductor Strategy, which is launched in May 2024, is Malaysia 10 years roadmap to move up the semiconductor value chain. As I shared just now, we are generally strong in the back end side of things. If you were to look at the value added on the front and also the back end, right? Actually, front end has more higher value added as compared to the end, and that's the rationale why we want to move up the value chain from the back end to the front end. So generally, it has three phases. The phase one focuses on strengthening the foundation, which is upgrading the outside assembly and test base, and also expanding the fabrication capacity. And then moving to phase two, that's where after we have built our foundation, we start to move into higher value activity, especially on the advanced chip design, fabrication, and also testing. The last phase of phase three looks at a long-term game where we seek to position Malaysia as the world-class hub for design. We want to be able to design the chips ourselves, and then we want to be able to gauge it using advanced techniques, and then we want to be able to attract major buyers to anchor their supply chain here. So to understand the rationale behind the NSS, it's important to look at where the economic value sits in the value chain. So if we were to break it down, the largest share of value is actually captured in the design and integrated manufacturing. So together, the factless company, which is the chef, and together with the foundry, the kitchen, they account for about 57% of the total value added. So this is because as a chef, you need to always crack your head, think of what new recipe you want to create. So there's a higher innovation there. And then after you have like, okay, today this is the meal that I've created. So that recipe actually belongs to you. So that's where the IP comes in. And then also high performance design will be able to capture the premium margins. So by comparison, wafer fabrication contribute around 90%, while the OSAT, which is the assembly, testing, and packaging, where Malaysia is strong in, is only contributing about 6% of the total volume. So this clearly shows that why the Malaysian government, we are very keen to move on the value chain, and hence that's where we launched the NSS. So Malaysia has been highly successful in the back-end side of thing. But eventually we need to move upstream into design chips and in R&D and then also into advanced manufacturing. That's where the real margin is, and then that's where the long-term competitiveness will come from. Okay, so next we are looking at where we stand today. So just over barely a year into the NSS plan. So far we have managed to secure more than 63 billion in capital, with the bulk of it actually coming from foreign direct investment. We have also notched some notable wins, notable FDIs, including Infineon expansion in Kulim, NXP, product commitment, and also new investment in MEMS and also PCB manufacturing. So on the local front itself, 13 companies have already been identified as emerging national champions across the value chain, spanning across the OSAT, automation, engineering services. So the 13 companies, some of them include MPI, Inari, Penta, Vitros, Callington, and Greatech. And also we do have some local IC design name, namely Opsa, which is listed in Bursa, and then we have Skychip, Infinix, and Xperia, which is non-listed. We are also seeing some progress in the catalytic capital and market access, with over 2 billion committed to crowd in the private investment, which is supported by a stronger international semiconductor partnership. And most importantly, the talent pipeline is being built with 1.2 billion allocated to train and upskill 60,000 engineers. So in short, this update shows that the NSS itself is not just a long-term vision, but it is already starting to deliver some concrete results. Okay, so this slide is just to highlight some of the Malaysia listed companies, which is positioned as the key beneficiary of NSS. So in the advanced packaging and also the OSAT, we have KASEM, which is MPI, and then also we have Inari. Both of them actually have a strong capability in wafer probing, flip chip, or system in package solution, which is a type of packaging method. And then under the equipment and automation, we have Master. They provide the automated test and factory solution. And then we have VTROS, we have Greatech. And then most importantly, Callington, which is one of our top pick, supports the fab expansion with ultra high purity gas delivery. On the design and IP side, we are seeing emerging Malaysia firms such as Opstar, Skychip, and Infinix. They offer IC design services from the front end to advanced AI and also edge processors. So together, all these companies, they represent a breadth of Malaysia's semiconductor ecosystem. So under the NSS policy, they are well positioned to capture the opportunity to move out the value chain and capture greater economic value. So moving on to the impact of US reciprocal tariff on the tech players in Malaysia, I believe some of us still remember very clearly how badly the tariffs has been hitting Malaysia. Okay, so post-tariff, we have the opportunity to do some ground checking with tech companies, and we managed to identify some key takeaways. So overall, the first key takeaways that we managed to get is the tariff impact on Malaysia tech companies is expected to be limited because most of the domestic players, tech players in Malaysia, we are operating in a mid and downstream segment of the value chain, and hence we have a little direct exposure to the US bound shipments. This simply means that we don't ship to US as much. That's why we are not subjected to the tariff as much as well. And then second key takeaways is most of the costs, we are happy that it will be mostly passed on to the customer. There are some instances where the end customer itself actually demand for a cost sharing. Um, it will be limited. So in this case, companies like NationGate, SKP, ATech, EG, Northeast, SFP, SAM, and Greatech, they have indicated that the customers are likely to absorb the incremental tariff costs. While there are some circumstances where, such as in the case of PIE, maybe like one of their major customer may seek some kind of cost sharing arrangement. Okay, so UWC highlighted that the potential exposure to its life science segment means that the life science segment is more vulnerable to the tariff cost. But we are good to know that around 15% of the end product are exported to the US. So the costs are likely to be shared for the backend something. On the outside, and also the ATE, there remains some kind of uncertainty on the tariff treatment. Notably, the MPI impact should be negligible as only 6% of its revenue is derived from US. And then Unisend is largely shielded also as most of its output is actually sold ex-factory and consumed locally. Inari so far, no impact at this stage as well. And then VTROX and Penta also see limited downside risk, with management highlighting that the low US exposure and then very little request for cost sharing. So overall, eyes remain on more clarity from the White House on how semiconductor tariffs will be implemented. So moving on to the last key takeaways is the reciprocal tariff are most likely to affect the EMS is also the fabricator. Fabricator in this situation, it refers to the equipment assembly players such as UWC, SFP Tech, Northeast. So in our view, the equipment fabricator and also EMS player, they are more likely to be subject to reciprocal tariff given their involvement in the assembly related activity. So in comparison, the semiconductor tariff is primarily aimed at encouraging reshoring of advanced front-end manufacturing in the US. So we think that this is less relevant to Malaysia's current industry positioning. So that said, actually we take comfort in the fact that for several EMS and also the fabricators company, the incremental tariff costs are expected to be shouldered by their client as well. So for moving on to the forex impact on Malaysia tech exporter. So as we know, most of the players in the tech sector, they invoice in US dollar because most of their customer are based in US. Even if it's not a US customer, usually it will be billed in US dollar as well. So when the ringgit actually strengthens and USD weaken, this will be translated into forex loss. But the sensitivity analysis over here is not uniform. Some companies feel it more at the operating profit level and some at the net profit level. So the simple rule of thumb in this case is the persistent weakness in the USD is actually a headwind for the sector itself. But in this case, NationGate actually stands out as an outlier with its USD cost and also the ringgit revenue profile translating a potential profit gain when the USD depreciate. This is generally because, as we know, NationGate is involved in the GPU assembly, the server assembly itself. So they actually purchase the GPU from NVIDIA in dollar, and then the moment when they sell it, it's actually billed in ringgit. So their cost is in US dollar, and then revenue is in ringgit. So when the dollar weakens, actually beneficial to them. Okay, so moving on to the stock pick session. Okay, so in the tech space, our top picks in the semiconductor space is KGB, UWC, and also Inari. So moving to our first topic, Kellington Group, KGB, we have a target price of 515 with an outperform call. So some background of the company here. KGB was founded in 1999, starting out as a specialist in ultra high purity gas and chemical delivery system for the semiconductor industry. And then over time, it has broadened its engineering capability and expanded its services to cater to more clients. So as of today, KGB has mainly two main business segments, which is the engineering business, make up roughly 89% of group sales. This segment, the engineering services, it includes advanced engineering for the UHP delivery system, process engineering, and also general contracting. The second segment is industrial gases, which contribute around 11% of sales. So this cover the production and also the supply of industrial gases, such as liquids, carbon dioxide, equipment, and also the related material. So the group is actually led by the experienced management team, the CEO, Mr. Gan, formerly a production engineer, and then the CEO, Ms. Ong, both of them which have been instrumental in scaling KGB during the years. Okay, moving into their first segment. So their core business is actually the ultra high purity gases engineering, which make out 70% of the group revenue. So the ultra high purity gases here refers to the delivery of extremely clean, contaminated free gases and chemicals, which is very essential for semiconductor manufacturing. So in layman's term, during the process of producing the chip itself, we need the surrounding to be free. Because if you look at the wafer and also the chip itself, right, it's even 100 times smaller than our fingernail. So easily, because of the small size of this chip, so imagine when you have a dust, the dust can actually simply corrodes the chip. So we need the environment to be ultra clean, to be dust free. So we need to have an environment where we can use the ultra high purity gases to maintain the vacuum state. And hence, KGB role is actually involved in constructing the gas delivery system to deliver this gas to the semiconductor companies. So the projects typically have two stages, which is the base build taking around 9 to 12 months, and then the hookup phase typically 6 to 9 months. So overall, the whole process could span between 2 to 3 years. So in this case, some of the KGB notable clients, high-profile clients include Micron, SMIC, TSMC, Infineon, Global Foundry, also Western Digitals. So beyond semiconductor, KGB also have a process engineering division, which contribute around 5% of group revenue, margins around 15%. And this segment focuses on custom integrated process, such as a tank farms, which typically runs for around 6 to 9 months. So in this case, its customer base is more diversified compared to UHP. So this segment covers industry like oil and gas, petrochemicals, serving the customer like Schlumberger and also Bronze. While it's a smaller contributor, this segment actually adds an element of stability and also diversification. So next is general contracting. It's only 40% of their revenue, which is of lower margin. So this segment focuses on manufacturing, facility and industrial plant. And then a notable project here was the Western Digital expansion in Sarawak, which is valued at around 420 million. So other customer in this segment includes Western Digital, Apple. They have been doing some solar related projects for them, and then also Intel. Moving on to their industrial gases segment. So this segment contribute around 12% of group revenue. And then the focus here is mainly the liquid carbon dioxide, which made up 80% of the steel. So they have two plants up and running. The first one started in 2019, and then it has a capacity of 50,000 tons annual capacity. And then another one is in 2023, adding another 70,000 tons per year. Right now, the utilization is around 64%, and then they are serving quite a high profile customer as well, such as Coca-Cola and as well as airlines like Malindo and also AirAsia. So lastly, on the industrial gases, it's also worth noting that the ACE Gases, which is a Callington subsidiary, is also positioned as one of the key enabler in the Malaysia upcoming carbon capture program. So the model here is very simple. So the waste carbon dioxide gas from a manufacturing plant will be captured, purified, and then liquefied, and then they will store it safely under the sea. So their existing liquid CO2 plant in Kentrade has already demonstrated this capability, and it's effectively a proven point of their track record. Oh, okay, this slide just to highlight their resilience profitability. They have been reaching record high revenue and also profit over the year. So as of June 2025, Callington's outstanding order book stood at 1.33 billion. So this actually provides some kind of visibility in the coming quarters. And then looking at the mix, the advanced engineering remains the core, around 66% of the order book. So this kind of gives us some assurance of their margins going forward. And then notably, management also guided for a stronger quarter momentum in Q3 and Q4. Tender book stands at 5.4 billion, and then geographically, Europe makes up the largest share, 45%, and then we are also seeing India, Singapore, their projects tendering in China and Hong Kong as well. Okay, so let's take a closer look at the Europe side of things for KGP. So on the 4th of August, they have been awarded a contract, which is their maiden entry into the European market. This for the semiconductor hookup project in Germany for leading power electronic semiconductor players in Europe. So the initial contract is valued at euro 30 million, which is around 146 million, with a potential of upside up to 50 million euro dollar. So the scope of this actually hookup services and also specialty gases. Okay, Japan market, recently quite vibrant semiconductor new market as well. Micron has announced 3.7 billion investment there, and then TSMC is also set to break ground on their Kumamoto plant. And then they have the national champion, Rapidus, a Japan-based foundry, which is pushing aggressively into a 2 nanometer technology. So all this fab expansion activity in Japan is expected to benefit KGP if they manage to penetrate into that space. Worth to note that Japan is actually a new market for them. Previously, they have not done any projects there. So it has some kind of promising outlook there. India market, which is continuously driving to be self-reliant on the semiconductor as well. So we are seeing quite a lot of fabs and also capex activity over there as well. So what this means is actually what I'm trying to say that India is serious to build its own semiconductor ecosystem from the ground up. For players like Carrington, it actually opens the door to their engineering expertise and also the UHP gas solutions. Okay, so this slide just to share that at the ASEAN Semiconductor Summit, KGB is recognized by the Prime Minister as one of the 13 potential national champions under the NSS. Okay, so overall, we like KGB for mainly two reasons. First, it is a direct proxy to the front-end wafer fab expansion, where its core business in the ultra-high purity gases and hookup solution means that whenever there's a fab expansion in all the geographical region that they are present in, they are standing to benefit. And then the second is they have a strong earning visibility supported by the outstanding order book of more than 1.3 billion and also a tender book of more than 5 billion. So this kind of give us some kind of assurance and also confidence of what is of their upcoming financial result as the pipeline is remaining strong. So a snapshot of KGB financial here. We are overweight on this stock with a TP of 515, pegged to a P ratio of 25 times to like FY26 earnings. Okay, moving on to the next topic, Inari. Okay, I will speed up a little bit because I think we have a little bit of time constraint here. So our next
Don't worry
topic
about that,
is
Hussein.
okay, thank you. Is Inari. We have a market perform call and the TP is 235. Okay, so a quick background of Inari. So Inari is the largest OSAT companies in the region. They have a very diversified product portfolio spanning from radio frequency, fiber optics, transceiver. They have optoelectronic sensors. And then they are serving a high-profile client as well, such as Broadcom, Cloudlight, and Intel. Inari has a total build-up production of more than 2 million square feet, and then they have 11 plants across three countries, Malaysia, Philippines, and also China. So on the manufacturing side, its services cover the full chain, starting from wafer. They receive the wafer from the client, so they will do the process like wafer bumping, inspection and solving, and then they will move to assembly, the advanced packaging, such as a system in package, and then finally after they package the chip already, it goes into testing to see whether the chip is performing up to par or not. Okay, so notably, Inari business is still dominated by a radio frequency product, which account for 65% of the revenue in FY25. So optoelectronic, which is a second biggest business, mark close to around 30%. So looking at the end market, of the Inari revenue actually still come from smartphone and also the mobile devices, around two-thirds of the sales. So on the right hand side, you can see two of the Inari core focus areas. So in the RF, the company continues to deliver miniaturization, so producing some of the world's smallest component, which is important to be placed into the smartphone. So as the smartphones advance, the demand for miniaturization increase and the size shrinks. And here is where Inari expertise came in. So we like Inari for several reasons. First, we think it remains a closest proxy to 5G adoption and also smartphone recovery. Notably, their radio frequency business is still the core driver, with some new product introduction for the coming flagship smartphone for their client is already underway. And then the second is they are expanding into structural growth areas such as the datacom and also the AI-driven demand. This is also an effort to diversify their business away from RF. So at its Philippine plant, the orders for 800G optical transceiver are rising, and then this is directly linked to the data center build out and also the AI application being adopted more widely. And third, Inari is investing in strategic expansion and also the partnership. So notably, their recent acquisition of Lumines together with San'an in China prove that there are some kind of effort to diversify into the automotive LED space. So this is a snapshot of Inari Financial. So overall, Inari is our topic within the OSA sector, and then we have a TP of 225 pegged to a P ratio of 38.5 times. Okay, moving to our next topic, which is UWC. We have just recently initiated this stock, and then we have an outperform call on this stock with a target price of 382. Just to provide some background on UWC, historically, they are an integrated engineering solution provider focusing on the back-end semiconductor and also life science and also 5G EV. So the company's strength actually lies in comprehensive capabilities. They support the customer from individual parts, from component up until the full turnkey assembly. So what makes UWC stands out is their shift from the back-end semiconductor to the front-end semicon exposure, which they are moving into a high complexity and also relatively higher barrier. Okay, so overall, our research shows that there are sizable market opportunity potentially up for grab for UWC, as several front-end customer yet to establish their manufacturing footprint in Malaysia. So in this case, we can see companies like Applied Material, ASML, Chroma, Coolidge and Sofa, Tokyo Electron, KLA, Vico, all these front-end wafer fabricated equipment players, they have yet to set up their manufacturing plant in Malaysia. So on this front, if there's a potential for them to diversify into the Southeast Asia, UWC could stand to benefit. And then notably, recently, we have also seen a lot of front-end suppliers coming to Malaysia. For example, New Ways, a key supplier to ASML, they've announced to build a plant in 2024 in Klang. So, so our assumption is assuming a conservative 0.5% wallet share of their US cost of goods sold, that could potentially translate into 750 million ringgit opportunity for UWC, which is 2 times of their FY25 revenue. Okay, so according to SEMA, the front end space is 7 times bigger than the back end, and then the global front end equipment are forecast to reach 133 billion in 2026. It is 88% of the total wafer fab equipment. So we are also seeing a ramp up in the front end exposure for UWC. So currently front end semiconductor made out around 30% of their revenue, and then it's expected to reach 40% in FY26 and also 50% in FY27, according to our forecast. So looking at the valuation, we pegged a 33 times PE ratio to its CY26 earnings, which is slightly below its 5-year average PE of 35.7 times. That represents an 80% premium to its peer. But we think that the valuation premium is justified on the PEG ratio basis, where UWC has the lowest PEG ratio of only 0.2 times compared to its peer. So this is largely driven by a growing contribution from a front-end semiconductor business and also expected recovery from its back-end side of things. So a snapshot of UWC financial here. So overall, UWC is our topic within the EMS and also the precision engineering sector. And then we have a TP of 382 pegged to a PE ratio of 33 times to CY26 earnings. So overall, we like UWC for several reasons. First is because of its exposure to the front-end semiconductor and also AI tailwind. And then second, UWC has an early mover advantage in the front-end equipment. So in case if any of the front-end semiconductor player who wish to diversify into Southeast Asia and potentially into Malaysia, we think that UWC could stand to benefit. Okay, so this table shows the peer comparison between our coverage in the tech space. So also worth to share that some of these number and assumption may be revisited in our upcoming tech outlook report, where we will see some rooms for improved optimism on the sector, particularly in the OSAT segment. So as to wrap up my session, we think Malaysia has a long-term direction in semiconductor. It's clear the focus is to move out the value chain and also deepening our expertise in the back end. So the reality is, just like what we have shared initially, the semiconductor cycle, they will have up and down, but history shows that overall in the long term, the yield automation and also the customer stickiness of the company is what will make the company stands out. So looking ahead, while we remain constructive on the back end side of things, we are selectively more positive on the front end semiconductor space. So in this regards, we think that KGB and also UWC, they stand out and well positioned to be the beneficiary of CapEx expansion. And then combined with Inari as a proven OSAT champion, we believe that these three names will capture the cyclical recovery and also the structural growth in the tech space. Okay, that's it from me. I will pass back the floor to Adrian. Thank you.
Wow. Thanks, Wunpin. I mean, I'm totally overwhelmed with the session in the sense that from your start on, I love your analogy, especially where you made it a lot more simpler. Not that it's still complicated. It's a text space, right?
Yes,
But I like the way you actually put it and how to cook and the recipe and which level it is for each segment. And I hope the audience do feel the same. In the tech space, it's actually not easy to learn. And yeah, wow, the floor is getting a bit warm up now. From Jan, why not Great Tech instead of UWC? If you do not mind, I'll add a bit on the question. 33 times PE, would you think that be a bit stretch or there's more room to go? Yeah, Won Pin.
Okay, so maybe I will take the first question. Why grade tech? Why UWC and no grade tech, right?
Yeah.
Okay, so I think both of them are actually operating on slightly different segment. Greatech, they are mostly they are factory automation companies where they are actually involved in sampling the automation line for their customer. So in this case, they are not so much dealing with with the subsystem assembly as UWC does. So looking at UWC, the reason why we are optimistic on UWC is because of their exposure to the front end wafer fabrication equipment players. Whereas if we were to look at Greatech, mostly their revenue exposure is coming from two main frontier, which is the solar sector and also the EV sector. So I would say that not really an apple to apple comparison. And then but honestly, Greatech, they have some interesting development over there where they are branching into other segments other than solar and also automotive to diversify their exposure. So,
Mm,
but in this case, we still think that for the players to capture the capex from the AI space itself, right? We think UWC is more primarily positioned than Greatech in terms of the AI spending. And then on the second question, 33 time whether it's a bit stretch or not. Actually, I think it's not very stretched, and I believe there's still some upside to it. Why do I say so? Because just now, as I've shared, the current 33 times is actually slightly below their 5-year average PE ratio of 35.7 times. And then if I were to
mm,
compare to their peers, definitely there's an 80% valuation premium there. But if I were to exclude, because this time when I'm comparing the peers, right, I'm actually including some Singapore listed player who is competing in
yeah.
the same space as well. But if I were to remove the Singapore players to focus only on Malaysia, right, their average PE ratio is around 21 times. So that's only 60% premium for UWC 33 times. So what am I saying here is compared to UWC peers, what UWC is doing is really slightly different. They are mainly in the subsystem assembly. They are working on the critical system and not just on the component level. So whereas UWC peers, mainly from Malaysia, they are maybe their involvement is mostly on the component level, but not so much on the subsystem critical part, which demands a higher expertise, and hence
Mhm.
we think that UWC deserves a valuation premium there.
Just out of curiosity, Won Pin, while we are
Mm.
at the average mean of 35.7 time, what would be the valuation for UWC at its peak cycle? Well, a peak cycle by that meant that in its peak form, not that when the cycle is down, what would be the PE would be like?
Especially during the tech boom following during the COVID period, right? I think there was a period where UWC was trading at near 50 to 60 times
Wow.
during their peak, and then it eventually came down. But I think
Okay.
overall, if we look at their 5-year historical, right, their valuation is always not cheap, but that's actually due to their ability to deliver and also their strong margins, I would say.
All right.
Mm.
Cool. There's one question from Sukri. Why not net get a price of 128 versus 162 and Trump wants USD devalue? Sukri, I'm not sure if I understand your question on 162. So, but Wunpin probably can share your view on NetGate.
Okay, so net gain we have an outperform 4 and also enterprise 162 as well. So I'm not sure whether you're asking why not net gain as our topic in this space. So we think that so for net gain, our view is that for the second half of the year, their GPU, which is their GPU sales itself will be of lesser visibility because due to the Trump's reciprocal tariff. So for Netgate, they have seen a lot of front loading of the AI servers during the first half of 2025. So, but if we were to look at their whole year, the year 2025, actually the first half of 2025 itself, they have mostly hit or at least 80% of their target for the GPU sales already. So for the
Mm.
remaining second half of the year, we expect a weaker GPU sales over there. And also they are currently in the process of R&D to move on to the another generation of GPU, which is the Blackwell, the B200 and GB200, and then that will actually take some time for the R&D to bear fruit, roughly at least 6 to 9 months over there. So in the short term, we think that Netgate earnings will have some kind of risk over
Slow
there,
down.
hence yeah, slow down.
So I think with the
Mm.
expectation of slowing down, even though the current valuation do commands a bit of a good premium, this where you recommend people to be you're managing expectation in the sense that where the upcoming results gonna be slow in that context, right?
Yes, mainly because of their GPU segment. But one of the silver lining is their bread and butter business before they venture into the GPU, which is the optical transceiver networking
Mm.
business, is actually picking up. Their clients are actually relocating from China to Malaysia, and then we are expecting to see some ramp up on that front possibly in the fourth quarter of the year. And that is actually a higher margin business as compared to the GPU itself.
All right. There's one question from Wilson that is actually curious on the stock pick page again. Probably
So,
it's the summary page. Or yeah,
summary page.
top pick page, three stock.
Which one? Let me see.
There's three. Yeah, stock
Mhm.
pick is three.
Yeah.
So you know what? Probably we jump into the peer comparison table because the three of them is in there. And
Okay.
yeah, we can stop here and the crowd
Mm.
can actually take a quick look because what we favor is KGB, Inari, and also UWC, right?
Yes.
Yeah. So, okay. So thank you, Shukri, for asking that question. So probably I think in the context of forward-looking expectation-wise, earnings from Netgate is slowing down, is expected to slow because of the front-loading effect. Then the height might could potentially shift to UWC because of the context of where they are dabbling into the subsegments, which Wunbin has explained. And what I think there's one more edge from UWC is they could have a guaranteed order, right, Wunbin? Minimum commitment from their clients, if I'm not mistaken, that they was dialing in.
Okay, I think that is on the back end semiconductor. So
Ah,
other than the
okay.
front end who is picking up, actually their back end order is also picking up. So one of their main back end semiconductor customer has actually provide positive guidance and also to them after their client has been able to penetrate into the NVIDIA supply chain. So going forward, we may be not only on the front end side of things that's going to accelerate, we may see similar ramp up in the back end semicon side, which their customer is actually providing them some kind of like minimum orders to commit lah.
Hmm. One thing, you have a very interesting question, and I must admit that KGB is been defying gravity for a bit. I was checking out on the, if you do not mind, I just check out on the, where do you call it? It's actually today it charted a new high again on the chart.
Yes.
You guys can see, right? Yao Hin, you had your hand up for a while. Do you want to speak? I can unmute you. is at an all-time high. So while we have it as a topic, right, what we can do about that is we I would definitely keep this stock in a very close watch list. And what can I do? Because now I have identified the outlook is good, and Woonping or not I, Woonping has identified a few which the fundamentals and the outlook is good, right? We might consider current level to be a bit higher now, and we might want to take a risk off mode. So where we can dabble in between is what our preferred choice to do here is these three levels. First is the top. I will always set an alert at 468 or 470 level, where if in the event there's any black swan event or for whatever reason that came and there's no change in fundamental, that's a call to jump in. Yeah, because of the fundamental remains strongly intact. For now, I think in terms of level is in already uncharted territory, and KGB is under Ming, right?
Yes, you're right.
Yeah, probably we will also check with him if there is any potential upgrade
Hmm.
catalyst part. I mean, the share price has performed way stronger than expected. So yeah. So okay, jumping to the next question, we have still about 5 minutes in. Wilson, how about MPI? The TP is a bit low. What's the potential prospect and recovery?
So for MPI, actually, we've noted that the recovery, especially on the automotive side, I think for MPI is actually underway already. So we have this kind of like confidence just because we actually monitor their client closely as well, and then we noticed that some of their notable clients have already guided quite positively in the recent quarters. So we have recently upgraded our TP as well to reflect the potential recovery on the automotive side of things. So all this while, during the automotive downturn, the industrial business for the MPI is actually what's supporting the earnings. And then if I were to look at the inventory level at the automotive players in Europe and also US, they are still hovering at above pre-COVID level, but it's already coming down. There are signs of coming down and stabilizing. So we do not discount the possibility that that could be actually marking the bottom of the industry and some kind of stock inventory, stock piling up activity may be happening as soon as the second half of the year. Hence, we are starting to turn more positive on the automotive side of thing. And then also we see some upside on the offside space, which will be there are some rooms for us to make some adjustment during our upcoming tax sector outlook report. Hey, Adrian, are you there?
Hold on. Yeah.
Oh,
Thanks for the MPI explanation, Wenbin. My site is a bit laggy. But there's one last question from Wilson on SKP. Is there any catalyst so far?
okay, so SKP we have an outperform core as well, but in terms of catalyst, rather than saying it's a catalyst, I would say that what SKP is offering is the stability in terms of their, of course, in the share price, also their business. So post earnings, we have actually managed to do some ground share after the tariff thing, and then we realized that one of their main customer who is in the consumer household industry. The orders are still strong. It's still there. There are no cancellation of orders to the tariff, and then the cost is also likely to be shouldered by their customer. And then on that front itself, they are also seeking some kind of diversification effort to reduce the reliance on their main customer. So currently, the composition of this main customer is around 60 to 70% of their revenue. So there are some kind of diversification effort there where recently they have managed to secure two new customer, mostly from the consumer household space. And then we understand that mass production has already started. So there will be this kind of ongoing effort to secure more clients to diversify the concentration from a main client. So we are optimistic on that.
All right.
Mm.
Do you have the latest US M2 supply chart? Hello? 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 Hello?
We can hear you.
Yeah.
Mm.
Do you have the latest
Latest.
US M2 supply chart?
I don't have it with me, USM2.
Okay. I guess that so far we covered most of the base of question, and I have this technical issue running with me where my desktop is running really laggy. I still need to share.
Um, from my side, your voice is okay, not breaking too much, but are you sharing your screen now?
I'm trying to share my screen, but
Mm.
doesn't seem like it's working.
Yeah, because from my side, I didn't see that you are sharing your screen.
Hold on, let me PM you.
Okay.
Give me a sec, yeah. Isabel is in the lobby. Ta-da. So I presume that yes, there are playbacks which will be uploaded in YouTube. And yeah, give me a second, yeah. Troubleshooting. Yes, you can still play back after in, but you can follow our Kenanga YouTube channel where you can play back the video. The this technical issue here is annoying. Shall I leave? Let me rejoin my Teams on the desktop. Oh, cool.
Question for the viewers.
Yes, email us on the Q&A side.
Okay, so actually, to be honest, I didn't follow Emulus that closely, but as far as I know, previously they have been doing quite well, especially that JV on the China side of thing. But eventually it didn't turn out to be working that good. But I didn't follow Emulus that closely, so maybe not so much information. Yeah.
All right. Hold on. My Teams are still lagging, man. Technical issue night. Sorry, guys. Bear with me for like a minute. Wenpin, did you get my message on Teams?
Okay, wait, let me check. Let me check. No, I didn't.
On
Wait,
the chat box? In your normal chat box, not in this current one.
oh, okay, okay. Oh, because I'm not logging in using my company account.
Ah, no worries then. Da-da-da-da-da. Let me restart.
Okay.
Let me restart this. Hold on, yeah, guys. Sorry for the small little glitch. It does happen. It's what happens when you're alone in the office at night, right? Seems like the lights around me is stable. Stable. So that's what I'm trying to convince myself.
So maybe Adrian, while you're troubleshooting the issue, I can pick some question from a
Yeah,
chat box.
please do.
Okay, is the worst over for tech sector and business going to be better in coming quarters? I would say in our view, I think the bottom is pretty much there already, but it also depends on what kind of end market you are exposed to. Like for example, if you look at the tech upcycle now, it's largely driven by the AI spending and also the AI application side of things. So if you are exposed to the AI or at least involved in some kind of supply chain around the AI, then you will stand to benefit. And hence that's the reason why I spend quite a bit of time on the beginning of the presentation trying to highlight the supply chain because in the case of UWC, the WFE customer that they are serving, which is a US based, they have nearly 100% market share in the AI NAND space for the equipment, and hence here is where we think that UWC will stand to benefit. So on the automotive, we think that looking at the inventory level of some of the US and also Europe players, is already stabilizing, although slightly above pre-COVID level. And then we have also been getting guidance from the companies, Penta, MPI. They are also giving signals that automotive is recovery. So we are turning a little bit more bullish on that front. Whereas consumer electronic, to be honest, it still remains a bit muted. Although we noted that the down cycle is maybe over already, but we have yet to see any sign of like U-shaped recovery for consumer electronics. Hence, we are still more positive on the front end space, especially those that are exposed to the AI application.
Kunpin, I shared your file. If you do not
Okay.
mind, can you try and share it on the screen?
Okay. Yes. Okay. Let me try sharing it now.
Yeah.
Let me know if you can see my screen. Let me adjust the size a little bit.
Let me see.
Okay. Let me know if you can see my screen.
It's coming out. Ooh. Hello, Isabel.
Hello,
Yeah.
Captain A.
Can you see the Kunpin screen?
Unfortunately, it just says WP to me.
Oh,
Yeah.
okay. Wait, let me share again.
I have a weird night in the office where electronics tends
So
to
I've
act up.
heard. Yeah, as you know, I'm having technical difficulties on my side as well. Yeah,
But
it's just like that. Show goes
this is
on.
where this is where Cafe needs to act tough, right?
Yeah. It's okay. I don't want to keep the people waiting here if the video is not, I mean, if the slides are not going to play. So for those of you who have just joined in, is this going to be my session now, Adrian?
Yes.
Okay. So since the slides won't play, don't worry, I won't waste your time. I've got 3 questions that I would like to ask you guys. Number 1, oh, wonderful. I do see some, the websites. Perfect. Leave it there, Wimpy. So the first question I
It's
want to
me.
ask you
I'm back
guys,
online.
all right. First question I would like to ask our viewers today is number 1. Would you be interested in attending physical events? For example, how often would you like to attend, for example, a market outlook? If I can take a quick survey and poll right now. So let's say if you would like to attend how many in 1 year? If every quarter, that is 4 per year. If every once a year, 1, or if it is, you say, I don't want to go to events, I want to do Zoom only. Can you just type it in the chat so I know? Even though I understand that usually whenever we ask people to do this on Teams, you guys are the ones who like to join Teams. So you might not want to go for physical events. But can you just type in the chat whether you guys are interested in physical or interested in online, or you're not in both? And that's fine as well. So since my slides are up, a really quick session. So disclaimer that I heard Adrian mention earlier. Next slide, please. Speaker,
A bit laggy.
that is...
You
okay.
see yeah.
I can. The speaker, that is me. As Adrian mentioned, we are licensed. Go on to the next slide.
A bit laggy, so there will be a 5-second delay.
All right. This slide is the awards that I'm looking at now. And the reason that we do awards is because there are many different issuers that are in Malaysia, right? There are 6, 7 different issuers at the moment, and sometimes it is hard for people who just came into the market to differentiate it. And we submit ourselves to this level of excellence and torture because we want to show to all of you, our trading clients, that our product is actually at an international level. So that is why awards are important to us. And that is why we want to hold ourselves to that standard. Just like, sometimes when we do exams overseas, maybe if you have kids, some of them are doing IGCSEs, or they do SAM matriculation, or they do all kinds of university degrees and courses, right? It's important that that course is recognized, or else everybody will think it's just a rubbish course or degree. So that's why we go for these awards. Next.
Sheer will and determination.
Yeah. As somebody who grew up extremely stubborn and determined, sometimes we think that by brute force, we can force ourselves into winning. But trading should be simple, easy, and fun, right? So it shouldn't be so against our nature. So we need to find something that works. Brute force, you're just going to torture yourself a bit. Next.
Change quite fast now.
All right. So for today's session, I'm just going to cover a bit about the website because we had a few people come to us over the last few weeks, and I usually try to compile the feedback. And I would like to show you something on the website after this, but just a recap of the previous slides that I covered last and videos, because our last webinar was only 2 weeks ago, right, Adrian?
Yep, 2 weeks ago, 11.
Yeah. All right, next slide. Next slide. These are the warrants that we have available, and this is the one we're going to look into. And all of these topics I covered in the previous webinar, where we look at the 3 different new Hang Seng indices that we have up. So Adrian, do you mind switching over to the website for just a moment?
Yep.
Thank you. Okay, so this is our award-winning Naga matrix. And I just want to highlight a few things that people tend to forget. So let's say if I look at the traffic light on the left-hand side, it is telling me that issuer is actually not keen to sell this warrant. What does it mean by issuer is not keen? Because that I think I lost myself for a second.
Yep.
I lost the connection, not my sanity, luckily. All right, so let's say a bid price is 3 cents and 3.5 cents on the bid and offer. However, the issuer doesn't want to sell anymore, but people keep on buying at 3.5 cents. Now, what happens is I have a limited inventory of whatever you like. You can say I have a limited inventory of curry puffs. I've got 30,000 curry puffs at 3.5 cents on the offer, right? But if you continue to buy from me and I almost run out, what I will do is I'll increase the price of the curry puff to 5 cents. 3.5 cents to 5 cents, hoping that nobody is ridiculous or stupid enough to buy 5 cents. once they see this. So that's why it can turn red sometimes. But we maintain the price over here, the 3 cents. So easy story is whenever you see the matrix being highlighted in red, there's a line over there, just avoid buying it. And we have plenty of educational videos on this too. So now if I go down to the orange, yeah, I can read over there. And the green is good to trade. Bid and offer spread is tight. And if I press select underlying, you can press it for me. Yeah, thank you, Adrian. So on top over there, you can see very easily that we have sorted it out for you. So let's say if I just press HSCEI, please.
Hold on, yeah.
No
HSCI,
problem.
yes, coming.
All right. So that pops up all of the Hang Seng CEI warrants that we have up. And let's say I am not so keen on this one because I look at the price sensitivity and all right, let's say I do want to pick up HSCI, that's fine. You see the first one on the left hand side, it is HSCEI CAD. If I scroll all the way down, even further down, all the way down to the page. All right, stop. So this is what I want to highlight. So we had people, now that people are trading a lot about HSCI and HS Tech, you can notice that there is a different timing when it comes to our market making for the Hang Seng and the Hong Kong indices. So scroll up a tiny bit, Adrian. I just want to show people the time. So when it comes to the warrant underlying, say if it's a Malaysian share or when we used to issue FBM KLCI, the morning session is 9 a.m. to 12:29 p.m., which is no problem because for you guys, the market opens in Malaysia at 9 to 12:30. We all know this, right? However, for Hong Kong, it only opens at 9:15 in Hong Kong. I mean, 9:15 Malaysian time, and then it closes by 11:59. So that really means in the 2 hours from 11:59, if you're looking at the index, until 2:30 p.m., the Hong Kong index could be moving, right? However, the Malaysian warrants cannot be traded. So there are two ways you can go about this. You need to know yourself very well. So the first thing you got to do is if you are a day trader, then you look at intraday trading. Your time horizon is a few hours within a day. It is for me as a warrants issuer, even though I would like you to be holding it, that's how warrant issuers make money. I advise you, intraday trading, you close your position before lunch break, you re-enter after lunch break. You don't know what's going to happen to the volatility. If you're a day trader, that's your position size. Every tick counts, correct? Let's say though, if you are a momentum trader, slightly longer term time frame, then the intraday volatility shouldn't matter to you. So it's fine to you to hold over lunch breaks. So I just wanted to highlight these few things that people tend to forget about over time. This is something that most traders know, but I know that we have a lot of new traders in the market. And so I feel that many people can tend to forget these little things. So anyway, I will come back next week with a few more key tips that I hope can help you. And I will summarize those as well. But I don't want to take up any more of your time with our technological difficulties on our technological sector outlook. Over to you, Adrian.
Okay, all right. I mean, I don't know which is more funny. Uh, a tech night with technical glitches, right? But nonetheless, I hope that Arian enjoyed the night. And also young talent, rising talent, Wunpin.
Thank you
Wish
so
you
much, Wonpin.
had,
Thanks both. Thank
you're
you so
great.
much. Appreciate it.
Yep. You have actually definitely shared quite an insight in terms of the segments, and it's 9:30 now. I hope that before everyone goes to bed, do take some time, fill in the survey form because you guys are champs, right? And champs do fill out forms so that we can do better. So without much, let's say good night, everyone. Good night, guys. I shall see you guys on the next month for our market outlook. fingers crossed, and yeah, hopefully there will be some new catalyst for the tech sector. And thanks, Isabel, our Warren's Queen. We are actually no longer in Malaysia. We are dealing more overseas also. Yeah, so great for us. Okay, good night, guys. Bye. Thank you all.
Thank you,
Signing off.
Adrian. Hope to see Captain A overseas one day.
Okay, bye. Signing off. Bye, guys. Good night.